This
Can you mute
conference will
yourself,
now be
please?
May
recorded.
till date. ठीक है. However, as informed to us, same seat. Yeah?
Can I
Yeah.
request everyone who's not talking to keep their uh,
This conference will now be recorded. This conference will
Yeah, welcome to all the participants to the first internal audit study group for the year 22-23. I'm the convener of the study group for this year, and Anil Makhija is the co-convener. Murtuza is going to be a little late and he will join in maybe at 5:30. So at the point that he joins in, we will do a small introduction for him at that point of time. The speaker for the day today is Vipul Gosalia, who would be taking us through the entire procure to pay cycle, and we could have a and he will also share the checklist with us, and we can discuss the entire process together. I request Gaurav to please introduce Vipul.
Thank you, Purvi ma'am, for giving me such an opportunity. So, good evening, everyone. So, myself Gaurav Mishra. So, thanks to joining for the today's session. So, our today's speaker is Mr. Vipul Gosalia. So, there's a lot of things and a lot of achievement about the Vipul Gosalia sir. I heard from someone, but yes, in terms of introduction, so he has completed his education from the Mumbai University, and he has completed his articleship from Mumbai also, AJSR and Company. After that, he worked with various company into the internal audit department like Suraj Diamonds Limited, Hindustan Construction Company Limited, which was the listed company. Then he worked as a head of the accounts and finance during 98 to 2001 at Crest Animation Limited. After this, he was also worked with the Genpact for the India and UK uh, process, and after this he was also worked as a head of compliances and audit for the GlaxoSmith, which is a leading chemical manufacturing company. After this, Vipul Bhai was also associated with one of the leading investment banking Credit Suisse for the India COE team, who led the organization of a team size of around 50 people. And his previous instant with the before the CMK was also the Credit Suisse, where he acted as a chief operating officer for risk and finance. And currently he is working as a director internal audit with the CMK and Associates LLP, and where he is handling the client with respect to the pharmaceuticals, BFSI, IT sectors, and a lot of things is there. So, in terms of experience, Vipul Bhai, I think he's a quite good experience. 20 years is a enough number. So, I think we can learn a lot from today's speaker. Thank you, Vipul Bhai, for accepting our invitation.
Over to you, Vipul. Over to you, Vipul.
Okay, thank you, Purvi, and thank you, Gaurav, for your generous introduction for this session. I would also like to thank WRC, Internal Audit Study Circle, to give me this opportunity to present the topic Procure to Pay. Without any further ado, we'll start the presentation. So we have, are you able to see my screen?
Yes, yes, yes.
Okay. Okay, so before I start the presentation on Procure to Pay, uh, what I would like to do is I would just like to ensure that we have a participative next 2 hours
हाँ
where we
खाया
interact.
हाँ ठीक
Hello,
है
can I
नहीं
request
मुझे कॉफी
everyone
नहीं
to
चाहिए
unmute unless they're speaking?
हाँ दूध नहीं दिया सुबह ना हाँ दे फिर दो
Can admin mute all the participants so that whenever required, that can be unmuted?
Yes, that will be good.
Okay. So before I start the presentation, I would just like to understand from the participants what are their expectations from this session, so that I will ensure that I've covered those areas wherever possible. So I think if anyone would like to share their expectation, that would be great. Anyone from the participants who would like to share what the expectation is from the next 2 hours, or I can start the presentation. Okay. So here is the agenda for next 1.5 hours or so. Now, what we would like to cover here is, one is we will cover an overview on the procure to pay process, including various stages. What are the common pitfalls in these processes? What are the issues that are there in these processes from an audit perspective, and what we need to be watchful of whenever we are looking at either internal audit or a concurrent review of a procure to pay process. So we'll cover that in the first section. The second section, we will deep dive into what are the areas from a data analytics that you can leverage to your advantage as an auditor while doing a review of procure to pay process. Third part is, which is a little bit interchange, so pardon me for that. So third part is on the audit of a automation part within the procure to pay process. So how do you audit a process which is automated within procure to pay? So we'll cover that as well. And finally, we also have the checklist in terms of at various stages, what are the key checkpoints that we should look at. So this picture has been in the news recently. So I would just like to see if anyone can tell me what this picture is all about. Okay. So this is actually a clay tablet that was that was archived or extracted, and the clay tablet is around 3200 BC. And this clear tablet is actually the first known accounting record of procurement. So we will just get a little bit detail. So I've just put the image and then what does image means. So the first item on the top is the number, which is the quantity, is 29,086. The second one is the barley. This is the product that was actually bought for the unit. There is a guess that it was a beer making unit, and hence barley was bought. The payment term was also there, which was 37 months. And finally, you see the name Kushim. Um, the guess is they're split in terms of opinion, but the guess is Kushim is the name of the accountant, or the designation of the office bearer of that particular team who was recording this transaction. So, the point that I'm trying to make is procurement is as old as our civilization. Obviously, it got recorded at some point in time, probably 5,000 years ago. And the key components pretty much remain the same even after 5,000 years in terms of what's the product that you're going to buy, what is the quantity that you would like to buy, what are the payment terms, and who is the vendor or the preparer. So that's just a bit of history for all of us. And now let's dive into the procure to pay cycle. Uh, I'll just go through this very quickly because we've got lot of things to cover in subsequent slides. And please stop me if anyone has a question. Would be happy to answer the question. So the procure to pay cycle, which is a continuous cycle in any organization, big or small, The procure to pay process, whether it's a manufacturing setup or a service setup or a hospital or a government organization, this is one process which will be there in any of the organization that you audit. And in that sense, it's very important that we understand the nitty gritties of the procure to pay process, and help us in our audit. So the cycle starts with someone having a requirement, and if it's a manufacturing organization, that requirement, bulk of the requirement would come from the plant in terms of raw materials, in terms of machineries, and then in terms of stores and consumables and what have you. If it is a service sector, uh, the requirement would be, in terms of human resources or human capital, any office space that is needed, and all those kind of stuff. So the requirements can come from any department within the organization. Once the requirement is received by the procurement team, they will start scouting for that particular product. And the scouting can be whether we have an existing vendor who can provide us this product or service, or if we don't have an existing vendor, then the first step would be to scout for a new vendor or new vendors. And as a part of the vendor sourcing, multiple vendors will be looked at, multiple vendors will be evaluated on multiple parameters like the quality of the product, whether this is the main product of that vendor or is it a byproduct of that vendor, the geographical concentration, any supply chain risk, the history of the vendor in terms of how many years this vendor is in business. So there are a lot of other parameters that will be looked at besides the quality of the material that or the service that vendors provide, in terms of evaluating to onboard that vendor for the organization. Once the vendor is onboarded for that particular product or service that we are requiring, quotations will be sought, at least minimum two quotations from separate vendors, if not two, maybe more than that if it's available. And then a vendor will be given the order in terms of a purchase order. That purchase order once being given, which includes payment terms, the quantity that needs to be supplied, the exact product description in terms of the quality parameters that the product should pass through or the service through that should pass through, will be mentioned in the purchase order. Then the order is monitored to ensure that the goods or services are received on time and as per expectation. One of the key components that happens when a goods is received by the organization is to see whether the goods that have been received is passing through the quality parameters that has been laid in the purchase order. And once that is accepted or rejected, if it's rejected, then the question of invoice doesn't come. If it's partially rejected, then a debit note will be raised. The process needs to be understood in terms of what has to happen when a product is rejected partially or a service is rejected partially. Post that, the process of getting invoice, ensuring a three-way match has happened between goods, purchase order, and the price. And once that three-way match happens, whether the approval is in place. And once the approval is in place, then the accounts payable team takes over to look at the GST aspects, the TDS aspects, MSME compliance aspect, whatever we need to comply from a statutory requirement perspective, and then it is processed for payment as per the payment terms agreed in the purchase order. So that's your procure to pay cycle. I'll take a pause to see if there are any questions that we have here at this stage. Okay. So, what are the building blocks of a procure to pay process that an auditor needs to keep in mind while doing an audit? And essentially, from my perspective, this is the experience that I have over the past 25 years. There are three key components at a very high level. One is the entire vendor master, the second part is the procurement piece, and the third part is the payment leg. So those are the three legs that you have to keep in mind in a procure to pay process. And within vendor, you'll have to look at the evaluation process, the selection process, onboarding. You have to look at the mandatory documents like your PAN card, your Aadhaar card, your GST, your MSME registration, any quality standards certifications that the vendor had mentioned at the time of evaluation, and cancel check or a proof of the bank account, so that the vendor from whom we are receiving the goods, we are making the payment to the same vendor. And then on an ongoing basis, the maintenance of that vendor master, whether in terms of changes that the vendor has required in terms of either name change, address change, communication address change, or bank details change. So that is one part of it. But the other part is to look at, do we have any inactive vendors after a point in time, say an 18 months or a 24 months. So an ongoing maintenance needs to be happening in a vendor master process. Once you look at the vendor master, the entire procurement leg needs to be looked at, either in terms of pricing, in terms of order, the quality, receipting of goods, and ensuring that the organization is only paying what has been agreed for and nothing more than that. And the final leg is ensuring the invoices are GST compliant.
Hello,
They
there is
have.
audio issue, it seems.
I'm sorry.
The audio is perfectly okay, sir. Just the sound of arriving in this, that's creating a little problem.
Sure. All right. Okay. From a payment, again, we need to look at the invoices compliant from a tax perspective. It's a valid invoice addressed to the organization. The approvals are in place as per the approval matrix, as per the procurement policy. And finally, the payment is happening on time or before time if there is any discounts available given by the vendor to the organization. So those are your building blocks, and we will cover each one of these from a review perspective in terms of what are the key components that needs to be looked at. This is very high level. Once you have got the assignment, what are the moving parts that you need to address from a planning perspective, including what's the period that needs to be covered, what is included in scope for the audit, what is excluded in scope. Focus of audit, a lot of times when you get when you get a procure to pay audit, the stakeholder gives you a clear area of focus. In one of the audits that we had managed, which was a manufacturing setup, the CEO had a clear expectation, or the audit committee had a clear expectation that they want us to focus on stores and spares, because the raw material part was very, very closely monitored and well managed process. So although we were looking at procure to pay, the focus of the audit actually was more on stores and consumables, because there were thousands and thousands of stores and consumables which needed to be ensured that they are accurately recorded and they are accurately valued, and those are existent. So focus of audit is important at the time of planning that needs to be taken care of to ensure that we have understood the scope and the expectation of the stakeholder. Uh, Even in terms of reporting, a lot of times the stakeholder has a clear expectation in terms of what are the kind of stuff they are expecting in terms of report, whether it is financial impact, whether it is fraud aspect, or any process level, design level issues that needs to be addressed by the organization. uh, and ensuring that the review notes are kept in mind while doing the process walkthrough. From an execution perspective, once you've done the planning, the most important part, which I've shaded here in blue, is to ensure that we understand as an auditor what is the IT landscape that the procure to pay process has. One is the obviously the ERP system or a tally or an in-house system that they would have. But what is also important to understand is what are the interfaces that this system has. We have seen in a lot of places where you have an ERP, but when it comes to documentation in terms of purchase order supportings or invoice supportings or goods received note supporting,
Umang, can you please mute yourself? Umang, please mute yourself.
so the IT landscape is important to understand. Like I said, one is the core system, which is the ERP system or the accounting system. The second is the interfaces and how they talk and what are the exceptions that gets generated on a regular basis. Second is the process and the policies of procurement. So one is procurement policy, the second is standard operating procedure that has been prescribed, and the authority matrix. A lot of times we have seen that the authority matrix is not very well defined, and it is important to ensure that there are well defined thresholds depending on the size of the organization, and the title matches to those thresholds from an approval perspective, and that needs to be taken care of upfront at the time of process walkthrough. Once you have understood the landscape and the process walkthrough, then you can chalk out the initial data requirements, including what are the key risks that you see in the process, and basis that what will be the data that you will need to give an assurance on those key risks. And then uh, a strategy whether you will look at data analytics, considering the size of the organization. A lot of times, the organization size, the volume of transactions that passes through procure to pay process is so huge. We have seen organizations where 100,000 invoices are processed on a monthly basis, and there, whatever sampling technique that you may use may not be effective. You will have to deploy some kind of data analytics and trend analysis to arrive at a sharper sample exceptions. So that needs to be decided upfront, considering the volume and the size of the organization, whether you will use data analytics or you will use some sampling techniques that have been prescribed by the institute, and then test those hypotheses or controls to see whether the risks have been adequately addressed. And the last four buckets, which are in red, are in terms of drafting the observation and the report, and discussion with the functional head before presenting it to the audit committee. So that's broadly the execution process from a P2P process. If you look at the audit flow, it will be broken down into five big buckets. The first one being the supplier. When I say supplier here, is in terms of who is going to give me the information and the data that I'm going to need for my audit. It could be the reports or the data that is generated by the IT team. It could be procurement and finance, who will give you the finance, the policy data, policy information, authority matrix, or it could be vendors as well, because the copies of the invoice or the purchase orders or the agreements, those are the ones who will give you the document, including annual confirmation on the balances. The three verticals in the middle are what your audit entails, in terms of once you receive the input, what is the process you're going to follow and what is the output that you're going to generate. And the input will be, like I said, ERP data, the purchase order data, the invoice copies, the agreement copies. And if the volume is very high, more often than not, all those things will be digitized. So rather than having a physical copy, you may have to require access to the data management system that they have, where they store all these data related to purchase order, invoices, goods receipt, lorry receipts, agreements, and all those kind of information. The process we have already spoken. Output, like I said, will be, one is pre observation, which needs to be discussed, and then the audit report and any MIS that you get generated. Nowadays, with all the data, lot of information is getting generated, which can be presented in the form of dashboarding in the audit report itself, and you can leverage applications like Power BI or Google Studio to uh, to present your data in a visual way. And hence, I've mentioned MIS as well, which is part of your audit report. And the output will then be utilized by obviously the audit committee and the management, the functional heads, to ensure that the processes are improved and the controls are implemented, and the statutory auditor for their annual financial statement. Okay, so what are the common red flags that we see in a procure to pay process? One at a very high level, and then two, tactically at a process level as well. One of the biggest thing that you can do is to see, when you look at a procure to pay process, what is the ratio of controls split between manual and automated. And that will also tell you a bit of the health of the process. And if the manual controls are more, then you need to ensure that you are looking at a bigger size from a sampling perspective. And automated, obviously you can deploy data analytics to collaborate or corroborate whether your assurance is in sync with what are the automated controls that are there in the organization. So this is one big matrix that you can look at to start with. Other than that, what you can also look at is, there are processes and policies which are in place. There are controls in place within the system, but how is the system override happening? To give you an example, when you look at purchase order, bulk of your purchase order will be system generated purchase order, but you will also see manual purchase orders being generated, and that is the area which you need to look at a little bit more closely to see what prompted the organization to create a manual PO, what were the approval mechanisms in place, what is the justification given to raise a manual purchase order. Even if you look at invoice, you can look at things like whether the invoices were recorded on time, what was the difference between the date on which the invoice was issued versus the date on which the invoice was recorded, and whether those were changed, which means initially it was recorded something else and then it was re-recorded, reversed and re-recorded. Payments as well, you have to look at which are the out of cycle payments that were happened uh, during your audit period, and what was the business justification, and what was the approvals in place for out of cycle payments to the vendor. Another interesting thing that we keep on observing in the procure to pay process is the, in the vendor master process, where the, sorry, was there a question for me?
No, I think your voice is echoing.
Okay. So annual review, I think there's some. Okay. Am I audible now?
सर आपका माइक ऑन करिए, माइक सबका म्यूट किया।
Am I audible now? Okay. So in the vendor master, we need to look at the maintenance part of the vendor master, because you keep on adding new vendors, but what we see is there's no well-defined process, or even if the process is defined, the rigor with which it is implemented to look at inactive vendor does not happen as much as you would have expected. In purchase orders, we see a lot of uh, organizations where the open purchase orders are not reviewed from an aging perspective. And even in the open purchase order, one is the aging of the open purchase order. The second part is you have a purchase order which is open, but you also see and you can corroborate whether any subsequent orders were given to the same vendor for the same product, which means there was a previous purchase order open and then there was a new order which was given and the previous purchase order was not utilized. And now there could be various reasons. There could be a fraud angle where the price of the product has changed substantially, and due to which the vendor may not be ready to honor his commitment of the lower price that was given at the time of signing of purchase order. So while you look at open purchase order, keep that fraud angle as well in mind from a review perspective. Invoices, like I mentioned, the invoice date versus the posting date, especially during the COVID period, we were seeing those dates stretching a lot, which was valid probably. But I think once we have settled down and we are back to normal, the difference between the two dates should not be unreasonable. And if it is unreasonable, then again, it needs to be checked, what was the business justification of such a delay. And finally, you can look at the sample based, whether you're doing giving assurance basis sampling or data analytics where you're looking at red flags on the entire population. Um, Legacy vendor master I've already spoken about. One of the other things that we see is the payment terms. Even within the same vendor for the same product, at different point in times, you will have different payment terms, and that needs to be analyzed to see again the business justification and whether those justification make sense or not. And finally, what are the dashboards or the MIS that are being prepared from the P2P process, which is given to the management, and whether they are accurate or not. So, when you look at vendor master, one of the pain points or issues that you can look at by deploying either data analytics is to see, from a vendor master perspective, even if it is an Excel, you can always verify, what kind of duplicates there exist, basis either the PAN number, uh, or mobile number or email address, or any common fields that are there spread across more than one vendor. One-time vendor is a process that is being misused in a lot of organizations, and that also needs to be assessed because it gets accounted through a common ledger, and sometimes the analysis is not possible to see how this particular process was used from a payment perspective as well as product and service perspective. So when you look at your vendor master and your procure to pay process, understand if they have a one time vendor process and what are the relaxations that are given as per the policy for processing a invoice through a one-time vendor. Electricity is one of the examples which are normally used as a one-time vendor, which may not be right, but in some of the organizations we've seen that electricity charges are routed through one-time vendor, which creates problems because there's no traceability in terms of analysis that you can do for a particular uh, location of electricity meter and in the trend around that. Manual versus system PO is a common issue that we have seen in a lot of organizations. Aged PO I've already talked about. Purchase order override is another example where, once a purchase order is signed, from an audit log, check how many purchase orders were changed and what were the parameters that were changed within that purchase order. It could be payment terms, it could be the price of a particular product, or it could be service level agreements or the penalty clauses. But it needs to be reviewed to ensure that the overrides were adequately approved and there was adequate business justification to do a purchase order override. From an accounts payable perspective, the most important aspect is duplicate payments and duplicate invoices. And we will talk about that in detail in subsequent slides. So I will not talk here right now. Compliance again, we will talk in subsequent slide in terms of what are the pitfalls when it comes to GST, MSME, or TDS compliance within procure to pay process. Do we have any questions that I can answer?
In the chat box, there are a few questions. We could take it up right now, in fact. So, one of the questions asked by Shilpa was, how could we check the validation of quotation process? Same vendor can give multiple quotations under different names. How can we verify the correct pricing quoted by the vendor?
So, same vendor can give under different names is a valid point, but there are different ways in which you can validate. One is to check by calling yourself and see whether the numbers are going to the same vendor. So that is one way to check. So it could be like your mystery shopping. You can do that. There is another way that you can do is by seeking quotation from that vendor and checking if the price for that same product is matching or is close by to the one that they have quoted to the organization.
I think what we also do is data analytics in this, by take the entire vendor database and see if the same PAN number is repeated, same telephone number is repeated under different names, same addresses are given under different names. Maybe do those kind of checks to also verify whether one vendor is quoting multiple times under different to this thing. And correct pricing is, as Vipul said, we could do mystery shopping, or we could call for an alternate independent quote from that vendor for that same this thing, and see how he's quoting and all. Anybody, any kind of this thing, what do you all do at your place? How do you kind of review these processes? Okay.
I
So the
think the other
second.
part that I can add is also the uh, price per unit that we would have paid when we had ordered this product in the past. So you can also look at pricing history and the vendors that were selected at that time. So that also you can check, and you can actually ask the procurement team why you have not used the same vendor that you had used previously.
The second question one Sakina had asked, that for the purpose of understanding if documentations hold good outside the ERP, even if we take help of data analytics, is it not recommended to check few samples physically to see if documents are authentic? So I think, Sakina, to answer this, while we say that the documentation is outside the ERP and we use data analytics, we would definitely look at the documents, but it would only be for the red flags or the alerts that the data analytics show. I don't think not seeing the documents at all will kind of we can do that. We'll definitely have to look at the documentation. But Vipul, do you have any this thing as to how you would want to
No,
take
no,
this question?
absolutely, Purvi. I think that's the see, data analytics is a tool to have a sharper focus on the samples that you should use to review.
Hmm.
So it is a means to an end. So it is not an end in itself. Obviously, in
Yes.
some cases where the duplicate vendors are there and the data already says that the PAN numbers are matching, you can have a document of PAN card sourced for both the vendors and ensure that it was not a typo error that someone had made a typing error. But at the end of the day, your data analytics will only tell you that listen, basis the parameters that you have told us, these are the exceptions, and you may want to look at it with more detail.
I think Sachin had a question. Sachin, do you want to address your question, or should I post it over here right now? Could I share it? So he was asking for a few automated controls in P2P, especially in vendor selection and pricing.
So, automated controls, or how do
He
you
was sharing.
audit? Yeah.
Yeah, Sachin, what was your question? If you could elaborate. Other question was that how does single sourcing, material dependency, and dual sourcing with significant rate variations be looked at? Ankush, that was your question, right?
Right, ma'am. Can I say, elaborate it further?
So,
Hello.
if I understood question, yeah, if you can elaborate further, Ankush, that would be good.
Can you hear me, sir?
Yes, yes.
Thank you for the opportunity. So, many a times what happens is there are a couple of large organization groups where we found that the significant cases of single sourcing material dependencies with a huge rate variations up to even 100% or more than 100%. Or there might be a cases of dual sourcing means multiple source of vendors are available, but the rate or business sharing with the higher rate vendor is on a higher side, or even it is a case of we are purchasing from import rather than the domestic vendors are available. So my question is, there is no, limitation or issue in data analysis, but when we try to portray or convince this to the management, we face some limitations that on a case-to-case basis, the verbal approval is there or some email approval for a particular case is there. So how can we better way portray this to the management, the significance and the relevance of, having multiple sourcing or quotation waiver forms in case of we are not obtaining particular quotations from the vendors. So this is my question.
Sure, sure, sure. So I think one part is, where you have a single source. The first question I'll just try to address, where you have a, single vendor who is supplying a product. I think there, from an audit lens perspective, what I would really like to understand and ask to the auditee is one, is whether this dependence is on critical raw material for the organization or a non-critical one. So that's the first question. The second question that you need to understand and address is to see whether this particular single source, if tomorrow it stops giving you, what will be the impact. And with that information, it doesn't really necessarily become an observation, but that is what will start a conversation with the procurement head and understand what is the business reason for for having reliance on that single particular vendor. So that is one part of it. I mean, I know in pharmaceutical setup, a lot of the active ingredients that are there are probably given, say, within India by maybe one or two vendors only. So you need to understand the business drivers um, for such reliance on a single vendor, and that will really help in assessing whether it becomes an observation or it is a business driver that is uh, emanating into a single vendor dependence. So that's point number one. I think point number two is where you are saying where the price variance is very high in terms of sometimes it goes up to 100%. And there I think your data analytics will really help whether it is happening uh, in one particular vendor or it is happening in one particular product, and that is two different things. If it is happening for a product, like we have seen steel prices going through the roof, in engineering companies that we audit, there is a rise of almost 100%, but that is a industry wide phenomena for a particular product, especially in the metal sector. All the metal sectors, the prices have gone through the roof. Even gas and oil we are seeing right now is going through the roof from a pricing perspective. So that is one part of the story. The second part of the story is if only one particular vendor or two or certain selected vendors are uh, having this kind of volatility, then it definitely warrants further investigation to understand if there is any fraud angle to that.
I think in continuation
Okay,
to
can
this sourcing, even Prajeet had asked that in terms of new PO raised in spite of open what is a remedy in case of commodity purchase like copper, aluminum, where LME rates are fluctuating every day. And I think Anil also had a valid point in this, that commodity purchase like spot booking, exactly as you mentioned, when the steel prices are going through roof, how does one? So at that point nobody goes to the PO and rate. It's more as to what the industry is facing and what is the phenomenal market, and you look into those rates. But Anil, you have anything to further elaborate for this, or Vipul, do you have anything to say?
No, I think the only point that I would like to add is more often than not, these answers come when an auditor asks. And I always feel, from a transparency perspective, if a particular PO was raised with a price which has moved substantially, then that PO needs to be closed proactively, mentioning the reason for closure, so that you're not waiting for an auditor to challenge you and then you give a reason and then you close that PO. So I think those are two separate points, and you can definitely raise an observation that open POs needs to be looked proactively on a monthly basis, and wherever it is going beyond a certain threshold, then the process needs to be documented in terms of the way it should be closed with adequate approvals.
Twinkle, you had something you wanted to ask.
Uh, Ma'am, can I, sorry to interrupt, can I
Yeah.
add to my question a bit, actually?
Yes, please.
So, sir, as
Yes,
you
yes.
rightly suggested and said that the single sourcing dependency technicality of the product is a major concern, but many a times, sir, we are having limitations, of that global presence of that product is not aware, or the technicalities are not aware. So, can we recommend this, or is it feasible to recommend to the management that each year they should assess the at least critical items that are single sourcing, and that sign off document should be kept, so that single source dependency should be justified? Is it feasible option to recommend to the client?
Yeah, it is always a good recommendation, a good business practice to at least identify your ABC analysis. May whatever is your A, and map it with a single vendor. You have a uh, very insightful combination, which you can first, obviously, rather than going directly to management, to discuss with the procurement team, and then understand why, whether they are looking at it this way or they would like to have a process where they are looking at it at least once a year and document that.
Thank you.
Okay. Twinkle was asking about elaborating on one-time vendors.
Yeah, so in in ERP system, uh, you don't know whether you are going to go buy from this vendor ever again. It's not a regular vendor. It's not going to be a regular sourcing from this vendor, and to avoid having, balancing out with your internal process for onboarding a vendor with all kinds of evaluation, all kinds of mandatory documents, and then getting it approved. The materiality of that item is so less that it doesn't warrant that the organization go through that lengthy process, and that's why they have an exception process called one-time vendor. But it needs to be very tightly defined in terms of the value and what are the kind of products that can be bought under one-time vendor. So you have those processes, and obviously the vendor account is open, the ledger account is open, but it doesn't go through the same rigor like another vendor that you would onboard with a long-term relationship.
Narendra was asking to elaborate on a three-way mismatch in accounts payable that you spoke about.
So three-way mismatch will happen. So what is a three-way match? The three-way match is you have a purchase order and you have an invoice, right? And you have a goods received note. So those are the three key documents. So goods received will only have quantity, right? A purchase order will have a quantity and uh, per item price. An invoice will have quantity and price and value. So when a goods is received, it needs to be matched with the purchase order. And when an invoice is received, it needs to be matched with the purchase order. and that is how you triangulate that the quantity and the value are as per what your purchase order was agreed to. Now, what are the exceptions? What are the mismatches you will see? The mismatches you will see will be in terms of, say, quantity. Say you had ordered 1,000 kg worth of paper for your packaging industry, and the supplier has sent you 110 kgs or 1010 kgs. So there was a 10 kg extra that they had sent, or maybe 10 kgs less they had sent. So most of the organizations where they know that the supplier will have some variation, they will define a threshold, and to which they can accept that invoice. So plus 5% and minus 5%, they will accept the goods and they will accept that invoice and it will be processed. But the moment that goes beyond that threshold, then additional process kicks in, where someone from procurement will review, someone from quality will review, and only when it is approved, then a debit note or a credit note will be issued. So whenever you are doing a procure to pay process, you look at uh, those items where there were three-way mismatch and whether the defined process was followed.
Okay, I think someone asked, Sachin asked about MSME compliance. If vendor has not declared or stated an invoice about MSME, can we assume he is not MSME or auditing needs to obtain specific confirmation? I think as per the act also, first they have to, we need to validate whether all the vendors are MSME compliant, I mean MSME or no. So normally on a yearly basis we recommend that a letter is sent to everybody for confirmation whether they are MSME or not. That is, I think, a must that we must kind of look into as to what is the process or adopted by the company to check whether how they bifurcate and how they detect, I mean how they this thing what are MSME vendors. So that is more from the housekeeping and that angle rather than just assuming that they are not MSME. That process needs to be set. Uh, as Tushar has asked, same format of quotation like font size and all, we can also check from that. Okay. Uh, Nipun has asked from accounts payable perspective, what are the major risk for payment entry is recorded after payment is made? That is T+1 basis. Nipun, do you want to elaborate on this? I think Nipun is silent. Okay, you want to answer this? Anybody wants to answer this? Or Vipul, you want to take it up?
So I think the payment one is obviously the paid on time as per the due date, and secondly is if it is a ERP environment, then the lag will not be there. When you make the payment is when the journal entry happens. But in a lot of a non ERP environment and a manual environment, you will see that the payment is happening and then the entry is recorded in the accounting system. But there, in those cases, you just need to look at whether the time lag is not unreasonable. You will have 2 3 days worth of time lag or 1 week worth of time lag, but it shouldn't be more than that. And if it is, then obviously it warrants a discussion and maybe an observation.
You can continue with your presentation now. We've addressed most of the
Sure,
questions.
sure. Thank you, Purvi. So, from an audit perspective, we have covered, and the questions came just at the right time, because I think from a procure to pay overview perspective, uh, I just wanted to ensure that we have covered the process, some of the common pitfalls, and the last part of it is what are the standard documents that you should really ask at the beginning of the audit itself, which will be pretty much the same in whichever organization you're doing the procure to pay audit. And I will not read it out here, it's there in front of you. um, but one of the key things there, if I would like you to focus on, is the second bullet. What are the IT systems and the reports around that. And the second last bullet is, list of related parties you should ask upfront from the compliance team, so that when you are doing the audit, you can look at the transactions from the purchase register that are done with related parties and see whether, on a sample basis, whether the pricing was at an arm's length. I think on MSME vendor, my 2 cents is it's a three-step process. If you want to look at MSME compliance, the first step is at the time of onboarding, the vendor onboarding form should have a section on MSME. A lot of times the organization don't even ask the vendor whether they're MSME or not. So at the time of onboarding, you catch uh, the compliance at that time itself by having a mandatory field where the vendor has to declare whether they are MSME, yes or no. And if it is yes, then they have to give the certificate. So that's the first step. The second is, a lot of vendors will put the MSME registration on the invoice. So you can also, as a part of your audit, when you're looking at the sample, you see if the vendor has declared the MSME registration number on the invoice, and then see whether the vendor master is capturing that information. So that's the second leg, where ongoing processing, you keep your eyes open to check for compliance. And third, like Purvi rightly mentioned, that you need to have an annual process around March where you send a mail to all the vendors for them to revert back and confirm whether they are MSME or not, which will set the stage for next year for the organization. Okay, so we will cover data analytics, and there's a very nice quote from T.S. Eliot, which says, where is the wisdom we have lost in knowledge, and where is the knowledge we have lost in information? And, it is more relevant at the stage at which we are right now, where there is just information overload, data overload, and it's very important when you get the data that you bring insights into that data, and with that insight, improve the overall process for the organization. So with that, let's deep dive into, why data analytics. I mean, there are a lot of bubbles here, but if you look at procurement, and you see the current scenario, the procurement has become, and I think someone uh, also mentioned that they are doing imports more than the local. And, to just answer that question, sometimes the customer to which the product is being sold has certain quality criterias and certain certification criterias, and you end up buying from someone who has got that certification, who is, an exporter. So, there are a lot of business reasons. There could be business reasons why they are preferring to import rather than buy locally. You just need to understand those business reason. So, procurement has become global. It has a global footprint. A lot of organizations are focusing on OCR, where, looking at the copy of the invoice. Many fields are being populated by the system itself. Straight through processing. In fact, nowadays we hear touchless processing, which means, the moment you generate the purchase order, and from there, it goes all the way through the payment, in terms of getting the goods, in terms of processing the invoice and paying it. Everything is automated. Um, uh, digital payments, because gone are the days where you were making payments through checks. More and more organizations are making those payments through NEFT, RTGS. Okay. Even the system uh, has evolved. You have an ERP system. That ERP system could be available on cloud. In fact, a lot of procurement requests you can generate through mobile as well. So again, there are multiple IT interfaces that happens in a procurement process. The regulatory landscape is very dynamic. I mean, if you look at during COVID, the TDS rates were changed for a certain period of time. Now, Just imagine the amount of complexity it adds within the procurement process, where you have to look at same vendor having different tedious rates depending on the dates of the invoice. Over and above the dynamic regulatory landscape where you have multiple regulators, and you have to comply with multiple regulators, you also have your internal third party risk management framework, your enterprise risk management framework, your procurement policy, your standard operating procedure, your commercial manual. So you've got a lot of internal compliances as well within the organization, your authority metrics, and what have you. All this, when you look at together, will generate lots and lots of data. uh, and hence, when you're looking at so much data, you have to look at data analytics, and deploy the data analytics capabilities for your audit. You can't just rely on samples. And you look at hundreds of thousands of documents in a month. uh, Whatever samples you will pick up will not be good enough, and you have no choice but to look at data analytics in your procure to pay audit. Now, what are the areas? Now, obviously, the areas are obvious, but you start with your vendor master, and then you go through your entire cycle and really think at each of that stage of cycle, what can I analyze from this data, whether it is data related to purchase order, your purchase register, your goods receipt, your payment side, and the compliance side. Now, I'll just give you one example on goods receipt. Now, the visualization that we have about data is, a report that will be generated from an ERP system, which will tell you during the month, what date and time, which plant location, which depot, which goods were received. But the data has moved beyond your ERP system, and nowadays a lot of organizations are even deploying your video analytics and image analytics um, as a part of your data analytic tool. When I say video analytics, when a truck entered the plant premise, the auditors are also looking at the video clippings at that particular point in time, in terms of who were the people who were present at the security gate. Were there any person who was not supposed to be there present, and what was the reason? So video is being deployed from an analytic perspective. Even image, invoice copies, or goods receipt copies, or lorry receipt copies. You have the entire data for the organization, and you can actually deploy image analytics software to identify duplicate images that you have within that data. So when I say data analytic, it is not just the ERP data or the system data. I am talking about the data which is outside the system, be it like I said, video or images as well. So we also have to broaden as an auditor our view and our understanding of data. And not to forget the entire social media landscape or ecosystem that you have. Recently we saw a case where a fraud was unearthed in one of the mutual funds basis, someone buying a very very costly car, and which prompted an investigation internally, and which led to fraud being unearthed. So the entire social media data is also available from an audit perspective. I think there were some questions around data analytics for from a compliance perspective. So we will cover that in this particular slide. One is on the invoice processing, duplicate payments, duplicate invoices. Early payments is one thing which you need to really watch out for, which is essentially your invoice date. You add the payment term that will give you the due date for that invoice, and you really identify from your data which were the instances where payments were made before due date. and understand the business reasons justification. Uh, Changes in value of purchase order, goods received. Payment splitting is again something that you can look at when you have the data with you. You really need to look at the authority metrics and then marry it with the data and see which are the invoices or payments that are very, very close to the thresholds of the authority metrics, which means, say, someone at a manager level had an approval rights till 1 lakh, and after 1 lakh, it needs to go to the department head for approval. So look at invoices which are at 99,000, 99,500, and then look at whether there were multiple invoices with a lesser duration. That is a clear cut case where they are doing splitting to bypass the approval matrix. Not bypass the approval matrix, but to curtail that approval matrix at a certain level. Payments without purchase order, wherever you have a big factory setup, big plant location, or service setup, excuse me, you will always have a business reason where something needs to be bought on an emergency basis. And in those scenarios, obviously, the system needs to be flexible, and hence, you can prepare, you can buy the product without a purchase order, because you can't really wait till a purchase order is generated, because you need that particular spare part immediately, otherwise the production will get impacted. So you need to look at those kind of emergency POs, or those kind of payments or invoices where POs were not raised, and which are material in nature, and try to understand whether that is happening at regular interval, is it happening for a regular part, and what is the reason, and is there any fraud angle around that. MSME, everyone knows 180 days, 45 days is when they need to ensure the payments have been made. So, look at those vendors which are MSME classified in the vendor master, and then marry the data of invoice and the payment to see whether the payments were done on time. And if it was not done on time, that i.e. 45 days, which is, even if your payment term is 60 days, the MSME Act supersedes the payment term. So you need to ensure the payments have been done within 45 days. And if it was not done, whether the reporting to the ROC has happened, if it's a limited company, on the biannual basis. Vendor master, we have spoken about multiple vendor codes. If you look at vendor master and you look at the critical or mandatory fields and non-mandatory fields, you can do a data analytics, and which can give you quick results to see which were the mandatory fields or critical fields which were not populated while onboarding the vendor, and what was the reason. And the company can do a one-time cleanup exercise to ensure all the vendors are updated with the mandatory fields. This happens when you have a legacy vendor master, and then somewhere down the line you move to a ERP environment, and when you move to the ERP environment, you never focused on your legacy vendors with incomplete information. So watch out for these kind of issues, especially during migration, or when an organization migrated to a ERP system, then what happened to the legacy vendors. One of the other areas which is very important to look at in vendor master is when you have moved an inactive vendor to an active vendor, and look at it with the lens of fraud, and see what happened, why was that vendor inactive for 18 months, 24 months, 3 years, and why was it made active. You can also look at a blacklisted vendor being whitelisted, so watch out for those as well. Lot of times a vendor payment has been put on hold, or a fresh purchases has been put on hold. Then when the hold is being removed, again look at the process, including adequate approval. GST, again, wherever payments have been made beyond 180 days, or not been made beyond 180 days, you look at whether the ITC has been reversed, and whether the same has been reflected in the GST returns. We are seeing a lot of times the same vendor having both RCM and FCM. So understand what is the reason why this flip flop is happening. TDS again, specifically look at TDS being deducted at a lower rate, and wherever it is such cases, then just see that there is a declaration certificate available for review. So I will just take one example because this is one of the things which is very important to understand how the identification of duplicate works in a data analytics environment. Uh, and this could be, this becomes very important where you have huge volume of procure to pay transactions. So if you look at this table, the four things that are very important to identify a duplicate is vendor number, invoice date, and invoice amount. And different systems will have different uh, controls built within the system to identify duplicates. So the first step is to understand that in the Audit ERP system, what is the configuration to identify duplicate. Now, if you take the example that I've highlighted, where if the vendor number and if the invoice number and if the invoice date is same, then the system will not allow you to process that particular invoice. So what I'm trying to say here is you are getting an invoice, you have recorded that invoice in the organization. After 2 days, you get the same, you get the invoice where the vendor number and invoice date is same, but the invoice amount is different. Then because the three parameters have matched, the ERP system will not allow the invoice to be booked. So if that is the configuration that they have, then when you're looking at data analytics, you look at the three lines below that. You look at data and see those data where the vendor number, and invoice amount were same, but invoice dates were different. Or you look at those scenarios where vendor number, invoice date, and invoice amount were same, but the invoice number were different. And the last case is where the vendor number is different, but everything else is same. Now you can have this scenario, believe me, because we have identified such cases when we looked at data analytics, and it really complements the ERP tool. Whatever doesn't get picked up by your ERP tool can get picked up by your data analytics. And when you identify such exceptions, it doesn't mean that those are duplicates. It really means that you look at those instances in detail. Those are your samples from an audit perspective. So I'll take a pause here and see if we have any question or that I can take or I can clarify.
Umang has a question. Umang, you want to ask?
Hello.
Yeah.
Yeah. Sometimes it is noticed that goods has been received on the basis of the GRN, and GRN mentioned the cost price which was already mentioned in the PO. Subsequently, in the next month, invoice was received with the discounted price, sometimes maybe 10% or 5% as per the mutual understanding. So how the stock is valued at the time of invoices, because the inventory has already been recorded at the cost price at the time of receipt of GRN.
So if the organization is giving you discount, then obviously you'll have to bake in that discount as well in your stock valuation. Unless
But
someone
but
has a different view. Yeah.
but GRN has been already recorded at the cost price, and even material has been sold. Some items has been sold, and very few items are in the stock.
So what
How
is
we adjust?
so what is the practice the organization is following?
They are recently booked as a cost price and ignoring the discounted price. Therefore, the stock is valued at higher price at a higher price.
And where is the discount recorded?
It's only in the books of account, not in the ERP system.
So when they're making the payment, it is the discounted payment they are making, correct?
Yeah. Suppose we have make a invoice of PO of rupees 100 and receive the goods of rupees 100. They make the entry for the 100 rupees and then make the payment of 95 and record the discounted of 5 rupees
Yeah.
as
See,
an
my
income.
understood. So my take is essentially it is linked directly to that product, and hence the valuation should be adjusted according. That is my view. If someone else has a different view or has an
Yeah,
experience,
my view is also same. My view is also same, but it is not possible to change the cost price at the subsequent to the invoice receipts.
understood, but
How
you
to?
can always do your inventory valuation adjustment accordingly. Na? It could be at a top
Yeah.
up level, not
Mustakin,
at a
please
product level.
mute yourself, Mustakin.
Correct.
Everybody who is not speaking, mute yourself.
Yeah. Hello. Hello.
हेलो।
हाँ मैडम, आवाज आ रहा है आपका? पूरी मैडम, आपका आवाज आ रहा है?
हाँ, लेकिन मेरे को कुछ सुनाई नहीं दे रहा है।
मैडम कुछ बोल ही नहीं रहे, तो आवाज नहीं आ रहा है, मुझे भी नहीं आ रहा
नहीं
है।
नहीं, जो स्पीकर का आवाज नहीं आ रहा है मेरे को।
मुझे भी नहीं आ रहा है।
You hear me now?
Vipul, we can't hear
Hello.
you.
Is it audible now?
Yeah, now you're audible.
Yeah. So, Purvi, till what step did you hear me, or do you want me to take this slide again?
Ask the participants. You want him to repeat, or he can go from this slide, or you want him to go to the earlier slide?
We haven't listened anything from this slide. I think,
So we did not hear anything on this slide.
Okay. I'll
This
take
can
the
be
slide
taken up
again.
by the
yeah, this can be taken up again.
Okay. I'll take the slide again. No problem. So the process. I'm just explaining a scenario which is a use case for automation. And the scenario is where you have a plant which manufactures a finished good, and that finished good is then transported to a warehouse. And because the distance between the plant and the warehouse is fixed, then the rates and the capacity of the trucks could be different, but the rate per kilometer is fixed. And hence, lot of the variables that you need to raise a freight invoice is already available with the organization. It doesn't need necessarily information from the transporter once the good is transported. So if you look at this particular process, which was fully automated by the organization, it started with updating the rates table in the SAP ERP environment, wherein per kilometer rate and the distance is hard coded with different truck capacity. And as and when the goods move out from the plant and moves into the warehouse, automated invoice copy is generated by the SAP system on behalf of the transporter itself. The transporter has to just log into the vendor portal of this organization and open the invoice copy, attach the lorry receipt, and then submit, because all the other rates are as per the agreement, pre-fetched from the agreement. And once it is okayed, that invoice is processed for payment. So that is your workflow, an automated workflow, which is being used in one of the organizations. Now, from an audit perspective, if you look at all the green boxes are automated, and the first box is what is manual. So when you look at an audit of this particular process, you have to think in two perspectives. First perspective is in the entire process, which are the manual touch points, and for that manual touch point, what is the sample and the control and the testing that I'll do. So in this case, what we do is we'll pick up the rates that have been uploaded in sample in the SAP in ERP system, and as and when they have changed the rates, we look at the backup documentation and the approval. So that is what we audit, because after that, everything is automated. So that's the first part we look at from an audit perspective. After that, what we do is we look at what can go wrong. That's the second aspect that we think about in an automated process. So in this particular scenario, what we saw was we look at where the SAP system has generated the copies of the invoice, but the transporter has not really logged into the vendor portal and generated the lorry receipt and attached it with the invoice for processing, which means we look at the data and see what is the aging of unprocessed invoice. and that is really your liability as an organization, because it is just waiting for the organizer, the transporter, to confirm or reject it. So that is one part we look at. We look at the maker and checker in the process, which means, when the tables were updated, whether there was a maker checker and segregation of duty. The third angle we look at is, once the invoice is processed, the transporter has given the lorry receipt and the invoice is processed, whether that processing has happened as per the payment schedule, which was hard coded in the system. And finally, what we look at is the last stage of the process, where when the goods was received at the warehouse, some of the goods were damaged by the transporter. And as per the agreement, whenever you have a damaged good, you have to ensure that a debit note has been raised on the transporter. So whether that process has happened properly. So that is how we look at an automation process, and that is how we evolved, or we designed our auditing process. Any questions we have here?
I think you can continue, Vipul.
Okay, thank you. So this was just one example which I thought would be helpful for the participants here, because nowadays you see so much robotic process automation, machine learning, and all those kind of stuff. But how do you really audit it? I thought, one example would really help to set the tone, and it's principle based, because you can apply the same principle in any automated environment. And then, we'll come to the final section of our presentation, which is around checklist, and we can see if people would like to contribute as well, basis the experience in their industry. And really, I think the quote that very nicely summarizes here is, everyone is entitled to his own opinion, but not to his own facts. And as an auditor, the whole purpose of the checklist is to ensure that we have established the facts, which cannot be refuted. So, when you look at the checklist, the first piece of the equation, or first piece of the block, as you would say, is, what are the controls that they have.
I'm not able to hear you, Vipul, again.
Okay, I think it got muted across, I think. Sorry. So I was saying, on the P2 procure to pay, at an entity level, we need to ensure that we have taken the procurement policy, standard operating procedure, authority matrix, and approved signatory list for payments. We also need to ensure that we have looked at the agreements or statement of work for material items, because a lot of times you see that for the same material or same kind of service, the agreement is non-standard, which creates a problem of its own. So at an entity level, you need to ensure and check and discuss whether the agreements are standard and the clauses of the agreements are standard. And if those clauses are non-standard, or there are exceptions, then what is the process around including non-standard clauses in the agreement, or removing standard clauses from the agreement. So that is, at an entity level, we need to ensure that we have covered that. It's a critical part, because whatever miss that happens at an entity level will cut across the entire process, and hence it's extremely important to get this right from an audit perspective. I will, take each of the sections that we have here. Starting with vendor evaluation. I think the key part here is the standard checklist for evaluation, including certifications, verification, vendor visit, vendor site visit, maker checker, in terms of someone has reviewed the evaluation checklist, and wherever there is a rejection for a particular vendor, whether it's documented properly. One of the key aspects of vendor evaluation, especially in big organization, is a regular frequency of evaluation, which means there is an annual evaluation of the vendor basis certain scorecards and metrics and the performance during the year. So we also need to check whether there is an annual evaluation process in place and then do a sample check of that process. Vendor onboarding is very critical because you are ensuring there is no money laundering and all those kind of stuff, ALM and all that. We need to be very sure about the existence of the vendor, and hence mandatory documents like PAN, GST, MSME, uh, authenticity of the bank account details that have been shared with the organization. More important is whether all these documents are stored securely and only access is provided only on need to know basis. In fact, in some organizations, we have seen the fields like PAN, GST are masked, so it is not available to view to most of the people in the organization. So it's a very critical piece in that entire procure to pay process to ensure that whenever they are onboarded, all the standard documents, mandatory documents are verified. And nowadays, we have seen that a lot of organizations don't take the cancel check. In fact, whatever bank details are provided by the vendor, a 1 rupee test is done whereby a payment is made to that vendor account for 1 rupee, and then the name of the vendor is checked in the bank statement to validate the authenticity of the vendor. Vendor maintenance process, I've spoken throughout the presentation in terms of inactivation. There is no blacklisting of process and blocking of vendor. So these three aspects we have to ensure that there is a process and policy in place, and we check whether that process is being followed. And whenever there is a modification to the vendor master, then you review the log process, vendor modification log report, and then do a test check to see whether the process was duly followed, including valid document and a proper approval. Pricing, I think we've spoken, there were some questions as well on pricing to ensure that more than one quotations have been sought and they are independent and on a sample basis. In fact, you can do a validation of the authenticity of the quotation independently as well. Order process, I think the key is to ensure that adequate data analytics is performed on accuracy between agreement and purchase order, quotation and purchase order date. Is there an unreasonable difference in days or the aging of the days between the two? Um, Perform analytics on open purchase orders, and I think I spoke at length in terms of what are the fraud risk in open purchase orders. And finally, to ensure that the review of open purchase orders are done regularly. Emergency purchase orders, are they not disproportionate to the overall size of the purchase orders, number of purchase orders being processed during the audit period? I think do that sense check as well, and ensure that whenever there's emergency process or PO process, then it is being properly justified and approved. Goods received, I think the key part is the rejection part, the quality rejection or the quantity variation, and the debit note and the credit note. Lot of times what we have seen is uh, that process has got a lot of time lag, which impacts the working capital directly, because you may have a process of raising a debit note or raising a debit note for variation in quantity, but that time lag should not be 6 months or 3 months, because that is your money being lost with that vendor. So you need to ensure that the process is very responsive to the quality check or the variation in quantity. Invoice processing, I think the key is to look at duplicate invoices, ensure that three-way matches happened, and wherever you have mismatches, you have looked at it in adequate detail. You can also look at difference in days. So one is the value part, but the second is the difference in days as well, where the GR date and the invoice date is unreasonably high. The difference in days is very high. Then try to understand why is it. A lot of times it is probably because the invoice was stuck with someone in the procurement process, and then really need to understand why was there a delay, whether it was on the vendor side or within the organization. Because if it is an MSME vendor, then there are other knock-on impacts in terms of non-compliance. I think on payment process, besides the duplicate payment, out of cycle is one very important aspect we should look at. And the other aspect is wherever we have given advances, whether those advances have been adjusted accordingly. So you can in fact also do a ledger scrutiny of advances with the vendors and see what is the aging of those vendors and link it with the ledger account of the regular payments and see whether those advances were supposed to be adjusted and were not adjusted. The same applies for retention money, which is kept for a period of 1 year or 3 years, depending on the items that have been bought and the agreement, and whether those retention monies were released on time. So that's all I have. Also have an Excel checklist which we will upload, which has a complete list for each area, which we will be able to share with you. So that's all I have from a presentation perspective. If we have any questions, would be happy to take it.
We are open to taking questions. Yeah, Sakina, please do.
Yeah. Yeah, good evening, sir. It was a really nice session. Now, I have a question. So, sometimes the products which are being purchased, the raw material, are so technical that there is a quality control lab report coming for the quality of the chemical basis which the credit notes are getting issued or purchase returns are done. And you find that certain specific vendors, there is a occasional deterioration in the quality, and then it again comes back to normal. Now in such case you want an expert to be involved to understand the lab report, but the auditee is not ready to bear the cost. So how should we incorporate such how should we deal with this, and how should we incorporate this in checklist?
So,
See, I
Sakina,
think the
I think,
way, yeah,
yeah,
please go
yeah,
ahead.
Vipul.
Sorry.
No, no,
No, no,
please
please go
please
ahead, Purvi.
So what happens is, as an auditor, you are supposed to have a fair understanding, and we also have, use the work of an expert. But if they're not ready to bear, I think you have to make it that as per our reasonable understanding. But we have to make a suggestion that this needs to be technically evaluated. So put in a recommendation saying that you will need to kind of look at to it from that perspective. But Vipul, tell me, what are your thoughts on this? Anybody has any thoughts for this particular question? Yeah,
So,
Vipul.
Anil here. We too face these challenges at time when we do audit of engineering company. So
Uh,
when we bring out the cases of benchmark, audit the material description remains same, material code remains same, but audit says that there are functional changes and various other technical aspects. So we do deep dive in that, but at times we have to agree and put it on the document. I mean, let it be in the draft report, and then subsequently either we accept or they accept. That's how we
yeah.
kind of close this audit issues.
Mm.
Yeah.
Vipul, you
Over to
have
you, Vipul.
any?
No, I think one is like I was telling, at the planning stage, these kind of things can be clarified upfront in terms of the scoping and our limitation, like Purvi mentioned, and that limitation needs to be then documented in the report so that you are conveying that you are giving a limited assurance as far as this particular aspect is concerned.
Anybody else has any thoughts on this?
Vipul, in case of in-house team, when in-house team does the audit, this particular thing becomes a challenge. How do we address that?
Sorry, I couldn't get your question. I think there was someone else as well speaking in the background. Could you please repeat the question?
Anil and Sumit, can you please mute yourself? Can you please
My
repeat
question
the
is,
question?
when we are saying
Yeah.
we should planning, okay. So when we are in-house team of a company, hello.
Yeah, please speak.
So
Okay, as in-house auditor, if you face this issue, how can you address? See, as an in-house auditor, I think what you can, I mean, this is just my view, is you have to put reliance on the lab report that is being given to you because it's your organization itself.
I think what happens is you, as an in-house auditor, are much more privy to a lot of information and a lot of this thing. But because normally you would also hold a place in a lot of I don't know the which all committee meetings or anything.
Yeah,
So I think as an in-house auditor, you have a lot of stance to even tell the management that this needs to be done. You would have a lot more authority than what an external internal auditor would have.
Ma'am, can I add to this?
yeah, please go ahead.
So as an in-house auditor, actually you have access to other departments, okay, especially the production department, wherein you have engineers or people qualified to that level. So you can in fact discuss it on informal forums and develop an understanding towards the lab reports and the parameters.
Sure, sure, Sakina.
Any more questions anybody has? Or can we ask Anil to give a vote of thanks to Vipul? Hello? Hello?
yeah, Purvi, we can hear you.
Yeah, yeah. Okay. I will request Anil to give a vote of thanks. But before that, I just have a suggestion. If anybody has any topics that they would want to be taken up at the group discussion, please put it on the chat. We will consider the request and incorporate the topics. Anil, please give the vote of thanks to Vipul.
Thank you, Purvi. Thanks for this opportunity to convey our thanks to Mr. Vipul for taking out the time and taking us through the delightful presentation for three reasons. One, one is the excellent participation that we have got. Peak participation we have felt is around 50 participants were there, 49 or 48 I noticed last. So that is the highest I have seen from past 1 year. This credit should go to Murtuza and WIRC, Bhavin being one of the most proactive, and Purvi. Secondly, Vipulji, it was a delighted presentation. There is one more reason for me, which I will tell you at the end. Delighted because you started with the era when you started with the era of showing that tablet of 5,000 years ago, and then you also took through us a journey of journey and to the digital and social media checks, which we were perhaps so far not considering as important aspects of procurement audits. The parties and making it more participative by giving a appropriate pause and making it a balanced presentation throughout past 1 and 1.5 hour we were there. Key takeaways for me were, I mean, I'm in internal audit from past 12 to 14 years, but these are the key takeaways for me. So, like key takeaways like duplicate invoicing, the negative testing that you have suggested when vendor number, invoice date is same. We should do the data analytics and do the sampling and then get into the further details. Sorry, and those social media checks you brought out, the ELC controls, that is entity level controls that you highlighted, were really something which made me to think of more. I mean, we need to adopt in our audit. And I'm delighted for second reason being my procurement to pay audit is starting from Monday for one of the MNC. So I will definitely use these things, these inputs, and so that's all from my end. And we are really thankful to you people for a lovely presentation and a dynamic presentation. It is not a typical PPT. I must compliment you for that as well. Thank you so much. Over to you.
Thank you,
Thank you, Anil.
everyone.
Thank you so much. Thank you, WRC, and everyone in the WRC team for giving me this opportunity.
Thank you, Vipul. We will now officially close this session. We will communicate with you the next event that we will have in the next month. And as already I reiterate that we are open to suggestions for any topics that we need to take up in the study group. Thank you.
Hello.
Yeah.
Last request to all the participants is please keep it up. Vipul has raised the bar. I mean, set the bar very high. So please let's continue the spirit till the end of this year. Thank you so much for your patience and participation.
Thank you.